We heard French President Emmanuel Macron actually encouraging European countries to stop their investment in the United States. This, and we're hearing, I heard it yesterday from many business owners saying this has a chilling effect on their plans to invest. At this point, how is Aon advising its clients to react in the near term to this new round of tariffs that hits pretty much every geography around the world?
And thanks for having me on today. That's a great point. I mean, you heard Macron say pause. You heard Merz in Germany say retaliate. You had Maloney say wait and see. I think the thing we have to consider, and this is what we're advising to clients, is this uncertainty is, it's a feature. It's not a bug. And it's going to be constant. It is going to be something that's going to be in the economic bloodstream for a while as the tariffs work themselves through the economy. So you need to start planning now. This is not a wait and see type of thing of like maybe things will change. This has been a long time coming. They're going to be present in the economy for a long time. And so the advice that we're giving to companies now is take a really analytical look at your supply chain. Where do you get your products from? How sensitive are they? How resilient are your suppliers? Can you do dual supply? You know, Aon has a deeply, we invested deeply in the analytics around supply chains and have a product that basically can examine the resiliency and sensitivity of your supply chain, not just to tariffs, but things like war risk, climate risk. So this is the advice we're giving to people now is understand what type of volatility you can withstand, whether it's pricing or availability of goods.
When you look at a company like VF Corp, which has a global supply chain, it has put manufacturing in lots of different companies. It was a lesson that we learned after the pandemic that diversifying your geographies was one way to ensure that your product actually gets from production to consumer. But that being said, if you tariff the whole world, there's really no place that is safe right now. And the USMCA was supposed to give companies an opportunity to invest in areas where they could be safe from tariffs. Some companies did. I talked to a company called Novalink, which encourages businesses to relocate to Mexico for their manufacturing. The owner and the CEO said to me, look, we had a company that moved some of its manufacturing from China to Mexico in order to take advantage of the favored trade. And then as soon as Mexico tariffs started being floated, they said, nope, forget it, and moved back to China and took their contract with the foam supplier from the United States with them. This has unintended consequences. How do you plan around what is not certain?
First of all, it's a great question. And everyone is focusing now on the tariffs, but the second order effects are going to be just as impactful. I think one of the ways to think about this is that uncertainty is, as I mentioned before, a feature of this. And I think the administration's view is the following. If you create uncertainty everywhere, and the United States is the only place where you know you can produce, manufacture, sell without exposure to tariffs, then we are by nature going to make the United States more attractive. So people are going to defer to come here. You saw kind of a preview of this when, we went from NAFTA to the USMCA. In NAFTA, there was a provision that said if you had a dispute with an employer, say in Mexico, you could use the NAFTA legal system. You actually had access to a U.S. court system. That got eliminated in USMCA. And it's because you are trying to eliminate uncertainty in the U.S., i.e. the storm to some degree, and increase uncertainty elsewhere, which is why the retaliation, say, by Europe of tariffs versus creating stability in Europe is, tariffs are a less attractive form of retaliation. Creating a stable Europe where people want to do business, or a stable China, or a stable India, wherever else, that is the true way to address this from a government perspective.
Right.
When it comes to a private sector entity, this is where understanding two things. One, based on your supply chain, can you actually get access to the products? And this is, to your point about the pandemic,
right,
a tremendous lesson we learned. The second is, what type of price volatility? Do you have a higher end consumer that can absorb the cost of it? What does that look like for you? And this is where the analytics become incredibly important.